Hi, this is Tim Yoder with Fit Small Business. I've been a CPA for 25 years, and today I'm going to give you my 10 best practices for managing your accounts receivable. So accounts receivable management is what a lot of people refer to as invoicing. So it's a process of setting your credit guidelines, your payment terms for your customers, and then providing those customers with accurate, timely invoices, and then finally collecting the money from your customers. So let's get to our 10 best practices. The first and the most important, in my opinion, is to send your invoices within 48 hours. So as soon as the product is delivered or as soon as the service is provided, you need to immediately issue an invoice. At that point in time, customers are happy, they've gotten what they've asked for, and they're willing to pay. If you send an invoice 30 days later, they're going to think to themselves, haven't I already paid this? They're going to set it on their desk until they can research it further, and it's going to get covered up. So send the invoices immediately because that's what customers expect. If you don't, they're going to forget that they haven't paid you. Now, there is an exception to this rule. I know some small businesses have regular customers that they don't want 10 invoices a month. They want send me one big invoice at the end of the month, and that's fine. And so I would modify that 48-hour rule and say, okay, they expect a bill on the first of every month. Make sure you get that bill to them within 48 hours of the first of every month. So get them the bill when they're expecting it. That's our first best practice. Our second best practice is to personalize your invoices. This is an opportunity to get your brand and name in front of customers. And so don't send them a plain white piece of paper with an amount on it. Put your logo, put your contact information, put your slogan, whatever you can to personalize this invoice, to use it as a form of advertisement almost. Our third best practice, have a formal credit policy. So I would encourage you to have a formal credit policy that your potential customers and customers have to sign prior to being able to buy product or services on credit. The main thing here is to make sure that they understand the terms. So when are bills going to be due? You're going to issue the invoices within 48 hours, and then perhaps they have 15 days to pay. If you want to give them special payment terms, maybe you'll give them a 1 or 2% discount if they pay within 10 days. So spell all of that out in detail in your formal credit policy, and also what happens if they don't pay on time. So what is your late payment penalty? What is the interest you charge on overdue balances? So make that very clear before you even allow them to purchase on credit, and then there's not going to be as many arguments when you try to assess these late penalties to collect. My fourth best practice, act swiftly when a customer misses a payment deadline. And so collecting late accounts receivable is probably one of the ugliest parts of a bookkeeping job, but it's something that just absolutely has to be done, and you have to stay on top of it. So the day an accounts receivable goes late, you need to contact that customer with a friendly phone call that's just a reminder. It's not nasty. You don't even assume that they did it on purpose. It's just, listen, we haven't got your payment yet. Okay? Very friendly, very easy to do. But you need to do that. Don't wait for a month and then try to contact the customer and then charge them a late payment fee. They're going to tell you, I didn't even realize it was late. It took me, took you forever to get me my invoice. Now you're telling me I never even paid it. So stay on top of things. Act quickly. Again, absolutely my top advice for managing your accounts receivable. One really handy tool is the Aging of Accounts Receivable report. You'll see at the bottom of the slide there. I actually included a link to a page we have talking about this report. I'll also throw that link below the video. But this report basically shows all of your customers, all of your outstanding invoices, and it groups them by age. So what are coming due soon and which are overdue. So you have to look at that at least weekly. I would recommend almost looking at it daily, because again, as soon as something moves from the current column to the overdue column, you need to address that. So weekly at the very, very latest, but I encourage it more often than that. My fifth best practice is to utilize your sales orders to efficiently manage your order. So a sales order is a document that you create when a customer places an order to document that order. You can actually have the customer sign the order, and then there's no doubt as to what they ordered. So, this would vary. A lot of businesses don't use sales orders. Kind of the bigger your orders, the more important it is to have a sales order. If customers purchase enormously large orders from you, like it's the a big manufacturing setup or something like that, you're going to want a sales order. You want to document exactly what the transaction is. But even in smaller operations, you could use sales orders. Those will be routed around the office as the order's processed, so everybody knows exactly what the order is, and then before you ship them, you can actually have it inspected, make sure it matches the sales order. So this is a best practice, but depending on the size and the type of business you run, it may or may not be necessary. Again, there is a page that we have that discusses a lot more about this sales order, so you can kind of decide if this is something that might benefit your business. My sixth best practice is use invoicing software. So, if you're trying to do your accounting in a spreadsheet, if you're trying to do your invoices with Microsoft Word, it's just not necessary. There are a lot of good invoicing software out there. Some of them are very cheap, some of them are free. So I highly encourage you to use invoicing software. Not only will it help create a pretty invoice, it'll help you track who's paid and who hasn't paid. So I have reviewed a large number of software that will create very nice looking customized invoices, and you can find those at that slug on the slide, our best invoicing software buyer's guide. My seventh best practice is to integrate your accounts receivable with accounting software. So there are standalone invoicing solutions that will then integrate with accounting software, and that is fantastic. There are also accounting programs that have very good invoicing features built right into them, so that you don't even need two programs to start with. You can buy it all within one program. QuickBooks Online is one of those. The reason you want your invoicing software integrated with your accounting software is that it makes sure that you're recording all of your payments, right? So you want the payments that you're collecting and using to offset outstanding invoices, you want to make sure those payments are also the same amount that's being deposited into your checking account. If you have two separate programs, one records payments received, another records bank deposits, and there's nothing to make sure those amounts are the same, then you're kind of begging for trouble, right? You need to see that those amounts are the same so that money is not disappearing. So again, two choices really. There are plenty of good invoicing programs, standalone invoicing programs that can integrate with bookkeeping software, but there's also a lot of bookkeeping software like QuickBooks Online that has fantastic invoicing capability built right into it. My eighth best practice is to segregate the accounts receivable duties. Now I know this can be hard for small companies, but let's talk about what you should try to do. So first, your bookkeeper should be the one responsible for issuing invoices. Then you should have somebody, oftentimes like maybe called an accounts receivable clerk, or this duty could fall to a receptionist perhaps, or office manager. But you should have a person other than the bookkeeper that actually collects the checks and then goes into the accounting program and offsets those checks against the invoices. Okay? And that person that actually records the receipt of the checks, they should not have access to the accounting software in the portion where they can change invoices, right? Nobody wants to believe their employees will steal from them, but unfortunately it does happen, right? And so it's very easy to see how you could steal money if you have access to both the checks and the invoice creation. You receive a check, go into the program, delete the invoice, keep the check, right? That's not that hard to do. So you really want to segregate those duties. One person creates invoices, has the authority to change invoices, can delete invoices. Another person collects the checks, okay, and does not have the authority within the program to be able to change invoices. Now, if you're a tiny company, your owner's heavily involved, then the owner just needs to get involved. That's what you have to do with small companies where you don't have the personnel to segregate duties. Well, then you got to get the owner involved so that they can oversee things and see that no money is disappearing. So they need to be the ones collecting checks, and then they can see, okay, so we collected a check from Henry, and so we need to, I understand we've done business with Henry, now we're offsetting the invoice. The owner needs to kind of keep track of everything. As the company grows, you'll have more employees, and then the segregation of duties becomes very important. My ninth best practice, address the customer's concerns if they haven't paid. This is a big item. This is really a problem with your company's communication when this happens. So the number one reason people don't pay you on time is that they're not satisfied with the service. And if you keep hounding them for payment without addressing their concern, you're not doing any good, and all you're doing is making this customer angry, and they're going to tell their friends. So the first thing you do, if somebody is late, you give them a call and say, hey, we haven't received your payment yet. What's up? Can you please pay us? And they'll say, I'm not very happy with what happened. And then you say, okay, you know what? I work here in the office. Let me get you to the right person, and they'll address that concern. And that's where you have to then have a system to get that customer in touch with somebody that can help them, because it's probably not the bookkeeper or the accounts receivable clerk that's trying to collect the invoice, right? Not the same people. They don't necessarily know the information about the job. So you have to have some sort of system in place to get disgruntled customers in touch with people that can help them before the bookkeeper calls them a second time or starts sending them collection letters. Because trying to collect from a customer that's unhappy, that's not going to work. Now, customers are not always right. Sometimes they're going to be unhappy, and they shouldn't be. You did what you said you were going to do. They owe you money. Well, then that's a whole nother process. We're going to have to send collection letters, etc. But before you get too involved in trying to collect, make sure the customer's happy. Okay, and my 10th and final best practice for accounts receivable is to monitor your accounts receivable efficiency. Now, there are different ratios out there you can look at. I like the accounts receivable turnover ratio. Shows how many times per year you're collecting your accounts receivable. The higher this number, the quicker you're collecting your accounts receivable. This is really just a nice monitoring tool to check for troubles. If you calculate this every month or every quarter, it should be fairly steady. As you implement new procedures, hopefully you'll see this turnover ratio get higher, meaning you're getting paid faster. But if there's a hiccup and something has gone horribly wrong, you'll see this AR efficiency slowing down, and you know that there's something that needs to be addressed. So that would be my 10th and final best practice. Monitor that accounts receivable efficiency to find out what you're both doing right and what possibly is going wrong. So again, my name was Tim Yoder with Fit Small Business, and these were my 10 best practices for accounts receivable. Please check out the links below this video. I'll provide links to all of the pages I've talked about here, as well as a link over to QuickBooks if you would like to get a free 30-day trial that will allow you to check out their invoicing software. They also do have a very nice accounts receivable aging report that we talked about. So again, Tim Yoder with Fit Small Business. I appreciate your time. Hope you have a great day.